Which is the best stock to buy? Palantir, Salesforce, or CrowdStrike? I'm going to answer that question in this video comparing these three stocks on 5 different metrics, starting with revenue growth. So let's get right into it. So looking at these three companies, what I notice in their revenue growth is that they are all decelerating, right? They went from a higher level of growth down to a lower level of growth, with Salesforce holding its relative growth rate constant better than CrowdStrike and Palantir, but CrowdStrike and Palantir have higher rates of growth, especially CrowdStrike at 52.8% in its most recent quarter compared to 14.44% for Salesforce. The next metric I wanted to look at, and in my opinion, a more important metric than sales growth, is cash flow from operations to sales. This measures the percentage of sales that a company turns into cash flow from operations. This is important because I think it's vital to turn sales into cash flow. It's not important to me, or it's not as powerful to me when an investment company generates sales at a loss and at a rate that is burning cash. So that's not sustainable. That's not as impressive to me as a company that's generating sales that's turning into cash. And in that regard, CrowdStrike is doing an excellent job boosting its cash flow from operations to sales to 40% in the trailing 12 months. And then you have Salesforce at 22.68%. And in last place, you have Palantir at 11.74%. Although Palantir has done an excellent job of boosting this metric in just a little over 2 years from negative 25% to positive 11.74%. So to me, it's not only the number that's important, but the trend is also important to me. If a company is showing development and progress and improvement in its trend lines of these critical metrics, I take that as a plus in addition to the absolute level of the metric as well. The next thing I wanted to look at was the operating profit margin over the trailing 12 months. And in this metric, Salesforce is the only one that's positive at 5.93%. Then comes CrowdStrike at negative 7.48%, and finally Palantir at negative 8.46%. Although I will note that Palantir management said that for its next fiscal year, it is going to be profitable on the bottom line. And in fact, in its most recent quarter, it was GAAP net profitable on the bottom line. So it would not surprise me to see Palantir's operating profit margin in the positive low single digits if we look at this 12 months from now. So the company's making good progress towards profitability, as well as CrowdStrike making good progress towards profitability, even though they are both negative. Salesforce is already profitable and moving in the positive direction. They also announced massive job cuts in the recent few months, so that's going to help with profitability as well going forward. So you might be asking, how is it that some of these companies are not profitable, but at the same time they're generating positive cash flow from operations to sales? And the big contributor to that is the fact that these companies use significant amounts of stock-based compensation. So instead of paying their employees in cash wages, they pay their employees some of their employee wages in stock-based compensation, which is not a cash expense. It's not a cash expense, but they need to account for it as an expense on the income statement. So the companies are not profitable on the bottom line, but because they use so much stock-based compensation, they can still be positive in terms of cash flow from operations. And the one that's been abusing, well, I shouldn't say abusing, but using this form of compensation more so than any of the other two companies is Palantir. You look at their shares outstanding going from roughly 980 million all the way up to 2.1 billion shares outstanding. So I mentioned earlier that Palantir said they will be net profitable in their next fiscal year. And here's how this matters for shareholders. So let's say Palantir generates $1 billion in net income in its next fiscal year. Because there are 2 billion shares outstanding, that $1 billion will be split among 2 billion shares outstanding. In other words, earnings per share will be 50 cents. 50 cents. Whereas if it still had only 1 billion shares outstanding instead of 2 billion, and the company earned 1 billion in profits, then its earnings per share would be $1 instead of just 50 cents. So earnings per share has been the potential earnings per share have been cut by half because the company has doubled its share count. Okay, it's doubled its share count, so the potential earnings per share have fallen. Okay, that's why this is important. And many investors don't pay attention to this metric. They just look at these tech companies and say, oh, they're making progress on cash flow. They're making progress on profitability. They're growing so fast. It's so amazing. Let's go ahead and buy the stock. What they don't realize sometimes is the 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 way they've been able to grow so quickly and the way they've been able to expand their cash flow so quickly is some of them are using a lot of stock-based compensation, which is going to hurt down the line when they eventually become profitable. And so it decreases the potential profitability of the earnings per share. Okay, Salesforce and CrowdStrike have not really abused this metric. They have expanded their shares outstanding as well, but nowhere near the level of Palantir, as you can see here. So finally, I will compare these three stocks on valuation, and I will use the forward price to earnings ratio. And according to this metric, the most expensive stock is CrowdStrike at a forward PE of 63.28. Then comes Palantir at 40.94, and the cheapest stock is Salesforce at 26.16. So, tabulating all of these five metrics that I compared these three stocks on and making a decision which one of these three is the best stock to buy, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Salesforce would be my favorite out of these three stocks to buy now. The company's already profitable, already generating positive cash flow from operations, already made meaningful cost cuts to bring their company operate their company more efficiently, and they're trading at the cheapest valuation among these three. So for those reasons, I will say Salesforce is the best stock to buy out of these three. Although Palantir and CrowdStrike are making a case for themselves, they are improving significantly. They're making good progress. They're growing fast. They're making steps towards profitability. So it wouldn't surprise me if next year or over the next couple of quarters, this answer changes. But for now, Salesforce is still the favorite here. In fact, Salesforce is one of my top 20 stocks to buy for 2023. If you want that full list, I'm going to link to that video right now. You can see it over here. So if you enjoyed this video, I think you'll enjoy that one. You'll get to look at my full 20 stock to buy list. And I'll also give you a link to my top 10 growth stocks to buy right now. So please click on one of those and I'll see you over there. Thank you for watching.